Hey everybody, Economic Ninja here. I hope you're doing great. We're going to do a morning market update, talk about what the headlines are today, and are we in a recession? That's the big question. But really, we're going to focus on retail numbers that came out this week. You know, guys, I started the week on Monday talking about Walmart, and I said before they came out with earnings that their earnings were going to be not very good. And the reason why is because inflation is so bad. And right now we're finally starting to see the companies coming out with that inflation data and the sales data, which is abysmal to say the least. And the big question, are we in a recession? Which we already know we are. We already had one quarter of negative GDP growth. We are going to see another one. Why do I know that? Because we are seeing it now in the company earnings. Okay, people are starting to contract their spending. So let's just start right here with the current look at the markets. All indexes indices are up right now, the Dow, S&P, and we're looking at the futures, but in about a second, it's going to refresh and we're going to be good to go. Today's good, right? But it says right here, as the Dow rebounds more than 200 points, it's looking as it is going to make its 8th negative week in a row. So to say that we've seen a lot of pain in the markets is an understatement. We are seeing we're moving into bear market territory, and there are a lot of people literally on the edge of their seat watching their retirements or 401ks and their mutual funds, and just at really big dips. And this is a very interesting time for the market. Now, just to go over a couple things right now, the bonds are trending up a little higher. Before I started this, it was lower, the 10-year bond. Again, that's something we're constantly watching for, because that leads us to the state of the real estate market, because as the yield on the 10-year rises, so does mortgage rates, or so do mortgage rates. Oil is up. We're looking at $112. You know, about, was it a month and a half ago, I talked about how we're going to see a lull in oil. When we were peaking, we're going to start to see a dip. It's sort of like a little reprieve, and then we're going to start taking off again. Still not a lot of leniency or coming off these highs for natural gas and things like that, which are really hitting people's pocketbooks, or people are spending less because they have to spend more on things that they need. Now, interestingly enough, we'll talk about crypto. You know, Bitcoin's been getting hammered, which brings down everything in the market. The Terra Luna situation doesn't help it any, but again, crypto right now is very tied to the NASDAQ. So when the NASDAQ goes up, it can go up. When it goes down, it goes down. There's so much leverage, so many derivatives involved right now. We really haven't seen a really solid decoupling from that. Now, this is what I wanted to talk about first before we jump into our headline or the story for today, is gold and silver. So gold and silver have not been going down on a percentage basis anywhere near what the stock market has been doing, and cryptocurrency. You know, I heard somebody say the other day that, whichever one during a down market, whichever one goes down least, you're good. Oh, it was Andy Schectman, Miles Franklin. He said, whatever goes down the least is the winner, really. And that is true, because you have to remember that every single one of these things, stocks, bonds, commodities, gold, crypto, they're all subject to a liquidation event, being that when, a hedge fund, a portfolio manager, even a retail investor is watching everything crash. If they are tied to margin debt, which just about everybody is nowadays, sadly, we're at record high margin, they have to liquidate something in their portfolio that they have to use to either pay the margin debt, come current, or they're in fear that the market's going to fall even more, so they're trying to raise cash. And we've seen the DXY increasing in value because of that very thing over the last 8 weeks. Okay, so now let's dive into this story that I want to go over. And it just came out. It's entitled, "Are We in a Recession?" It says retail earnings preview, Costco, Dollar Tree, Dollar General. We talked about Walmart. Didn't let you down there. Walmart did come in with really bad earnings. Target was not much better. And we saw Walmart fall the greatest, on a percentage basis, the greatest drop since 1987, which was what, 11-12% in one day. So it says right here, Walmart and Target have spoken, and the market did not like it. Consumer spending is already being hit by inflation. Next week sees more retailers reporting earnings. And I believe, you got to remember that Walmart and Target are leading the pack. Those are probably two of the most used utilize brick and mortar necessity style stores, right? Even though they don't sell a ton of necessities, only about 10%. And I did have a comment from somebody the other day that said I was wrong, that Walmart does sell way more. They get all their groceries at Walmart. And I want to remind people that not every Walmart has a grocery store in it. As a matter of fact, that is not the norm. So to the person that said that, you should probably look outside your town, because my Walmart does not have a grocery store in it. And literally you walk around and like more than, less than 10% of the stuff in Walmart are things that you actually need on a daily basis. So it says right here, this week was shock and awe in terms of retail and consumer stocks, traditionally viewed as safe havens in times of market stress, which is absolutely true. But remember, hearkening back to the 1970s, we have not seen something since then like we're seeing now, and it is going to get worse as far as the inflation story. It says Walmart kicked things off with a downbeat outlook, but Target really set investor fears on high alert with its clearly bearish outlook. And remember, again, Walmart set the tone, but Target really ramped it up, because when earnings come out and we get all these earnings in one sector, like this week and next week, our retail earnings time, one company comes out with bad earnings and everyone's like, don't worry about it. It could be, corporate decisions or policy making that screwed it up, or something like that. When you start to see multiple in a row in the same sector, like retail, start coming out with bad, not only earnings, but really the forward guidance, that's when things get really ugly. And this next week, we're going to see, I believe, companies that are going to have horrible earnings, because here, we'll get right into it. It says right here, next week is now increasingly teed up for a counter trend rally. Retailers such as Costco, Costco sells a lot of groceries. I'll give them that, right? Dollar General, Dollar Tree, all report along with plenty of others that are in what is shaping up to be a key week to gauge the strength of the U.S. consumer. All right, so here we go. Best Buy. Okay, they want to spin it positive, right? They're like, hey, Costco's coming out. Dollar General and Dollar Tree. First off, I want to explain something. Costco does have a lot of food, but it will start to cover, our jewelry, our, certain sectors in our store, products. Consumer electronics, I'll bet you, are going to take a big hit, because people already loaded up on all that stuff during COVID when they got their big stimulus checks. All right. You're going to start to see information in Costco. They might come out with pretty good earnings, right? Yeah, we sold a ton of food because there was a bunch of people prepping and they went and bought tons of chicken packs and stuff like that. You're going to see weakness in our jewelry sections, our outdoor, furniture and lifestyle section, things like that. Consumer electronics, they're going to start to show weakness, and that is going to start to really ramp up the fear in a lot of traders on Wall Street. Best Buy, how many people think that Best Buy is going to come out with good earnings? It's going to be abysmal, and they're going to be pointing the blame. Williams-Sonoma, same exact thing. There's nothing there that I need to live or survive. It says our base case is the risk reward now favoring outperformance to the upside. I do not see that coming, quite frankly. This isn't financial advice or trading advice. If you own any of these stocks, I'm not saying to buy or sell them, but I'm going to be honest with you. After this week's earning call, I would be very leery, but I am personally very leery. Okay. Again, not financial advice, of jumping in and investing in these companies right now. This is not the time. The Federal Reserve has not gotten control over it's hard not to laugh. It's because I know you guys know, Ninja Nation knows, subscribers on this channel understand this. The Federal Reserve is not getting on top of inflation. 25 basis points, even 50 basis points, and is not going to do it. And the Fed came out, Powell says, I'm not even going to consider a 75 basis point hike. So if you think about it that way, there is no way on this earth that the Federal Reserve is going to get control of inflation anytime soon. So they're a very serious risk here. So what do you do to prepare for that? Well, you buy things ahead of time, things that you need. I'm talking about food, even, hygiene products, things like that. Like, hey, that sounds funny. I use disposable razors. I'm going to buy a year's worth, or I'm going to, I still eat. I still got to use some toilet paper. I buy toilet paper. A lot of people buy those, little bidets, little water wands, whatever. I don't know if that's my thing. I don't know, but we're getting a little too deep. Point being is this: when you live a certain lifestyle and you want to maintain that, you know what it takes. It's very simple. And in this environment, when you literally know the Fed is just jawboning. Oh yeah, we're gonna get on that inflation thing. Hey, what time's the yacht taking off? Okay, yeah, we're getting on it. We are getting on it. Like Jay Rome says, hey, that's my number one priority. I'm gonna raise rates like a month from now. Well, why don't you just do it now? Nah, I'll do it in a month. I mean, let's look at, I mean, you know where this is going. Let's put a little stress on the American public. Let's put a little squeeze on them. Make them really appreciate this dollar crap that we keep printing out of the, what do you mean it's out of ink? Oh, get some more ink. We're going to print more. It's coming out. We're going to make them appreciate those dollars, those stimmy checks, and those are coming back. I can almost guarantee it. But the sad thing is it's going to be too little too late. So just like in 2007, everybody was handed stimulus checks that spurred up the economy. How'd that work out for everybody? Not very good, because a year and a half later, everything went crashing down and people lost their jobs. Hey, everybody got a bunch of stimulus checks a couple years ago. How's that working out now? Well, I'll tell you exactly how it's working out. Things are getting more expensive. There's more money sloshing around. The velocity of money is slowed down. It's going to start picking up. And when it picks up, woo, we're going to have some fun. All right, guys, that being said, I thank you so much for watching. I hope you guys have a great day. Thanks to all the new subscribers, 200,000 subscribers. You guys are awesome. You guys are awesome. This is literally because of you, not because of me. All I got to do is show up. All right, guys, that being said, the Economic Ninja is out.